Hi everyone, Josh Olfert back with another video, and today we're going to talk about the worst investment I've ever made. This will be fun for you, but not so much for me. And let's not think like an investor for a bit. So when I started investing for the first time, I've been doing this for almost a decade. I started when I was about 15 years old. When I started investing, I did what you've probably done and what everybody does. I went to Google and I typed in what are the best books to read on investing. And the ones that come up, regardless where you're looking, what I found and what you probably found too, is that you get books like The Intelligent Investor by Benjamin Graham, or things like Security Analysis. And what these books talk about is a philosophy called value investing. Essentially what you're trying to do with value investing is you're trying to emulate people like Warren Buffett. You've heard of Warren Buffett. He's one of the best investors of all time. Value investing is when you are trying to find a business that you can buy for less than it's actually worth. Now you might be wondering, how in the heck does that work? How do you buy something for less than it's actually worth? You can think of it this way. If you go to the supermarket and you see a piece of food that's past the expiry date, they might offer a deal on it if it's not outrageously harmful to your health. That's what a value investor does. They go out into the world and they look for companies that people think are past the expiry date. They go look for companies that maybe for some reason or another just really aren't performing well, and maybe we can actually buy something for less than it's worth. Now, if you buy something for less than it's worth, that's obvious. Imagine, what if you could buy a $20 bill for $15? It's an obvious trade. You pay 15, you get 20, and now you have a $20 bill. Like it's blatantly obvious that that's a great idea. That's what value investing is, except we're not buying dollar bills. We're buying companies that are out of favor. This is what I was doing. I was going around digging through the boring stuff, looking at financial statements, looking at balance sheets and income statements of these public businesses that I found online, and trying to see if their stock price was lower than what that stock was actually worth. Value investing, long-term investing, is extremely effective, but it's as boring as watching paint dry. And I mean watching paint dry for decades, because it requires that you try to figure out the value of a company, and then you hold on to that company until the market or until the world realizes maybe that company isn't so worthless after all. With all that said, the number one issue that value investors are looking for is they're trying to avoid what's called value traps. A value trap is when you look at something and you think, hey, that is actually priced for less than it's worth, but you realize that it's priced less than it's worth for a reason. It's because it's crap. Digging through a pile of crap looking to find a diamond, and all you found was crap, thinking it was a diamond. I actually started investing this way, and one of the most high conviction ideas I ever had, where I thought I was dead right and I was telling people they should invest in this thing, was a women's handbag maker called Coach. Coach bags were in fashion. People would wear Coach bags. And I thought, why is it that this company's stock is performing so poorly? They have a good brand value, the financials line up, all the signs here are pointing to the fact that this actually might be a business that can create value into the future. And for some reason, the market's not giving it that respect that I thought it deserved. This company continued to go down, and I would say, well, this is becoming even more of a deal. And I would buy in, and I would buy in, and I did what's called averaging down. And I found myself in a position where I owned a ton of Coach stock. It was way larger a piece of my portfolio than I had originally hoped, and it turned out to be a complete value trap. Coach did nothing but go down and go flat and never came up for the rest of the time I owned it. So for me, looking back on that experience, that was probably one of the worst investments I can recall, because there's trauma associated with it. I had told people that they should buy that. I had put my personal money into it. I had put so much time and thought into that, only to realize it was a complete trap. And I continued to put more money in it and continued to lose more and more. At the time, looking back, it wasn't huge. It was probably a $2,000 to $3,000 loss, but I was young. It was a way bigger piece. And I think the reason that I don't have a bigger story for you, the reason I don't have a $20,000, $30,000 investment loss like some of you might, or some of our clients hate to mention. The reason I don't have a story like that is because I learned from these experiences when I had such a small amount of money. I'm so fortunate that the biggest losses that I had were losses that I had before I really actually had a career or a sizable portfolio to put at risk. Now, my story is actually kind of rare. Because I started young and because I made a lot of those big mistakes early with a small amount of money, I got out unscathed. but that's not necessarily true of some of the people I know. One story I like to reference because it's just stuck in my mind is the story of, let's call him Harold. His name's not actually Harold, but we're gonna call him Harold. So Harold and I would always discuss investments online. We were friends, but we lived in different cities, and he was a specialist. Harold was a specialist in one specific industry, and he would cover that industry, and all he would do all day is read about that industry and the different investment opportunities there. And I remember one day sitting on social media, reading through my Facebook, and Harold messaged me and he says, hey, there's a stock in my sector, it's gonna blow up. I'm putting pretty much everything I have available into this. It's a guaranteed sure story. There's a release coming out tomorrow that's probably gonna double to triple. We probably have a 2 to 3x upside on this stock, so I'm gonna go all in. And I said to that, wow, like honestly, I'm so busy averaging into my coach loss that I have no money left for you, I apologize. I'm so busy losing money over here, I don't really have any more to lose. So he essentially said, okay, no worries, but you know, keep an eye on it and you'll see what happens tomorrow. And I kind of felt bummed out. I was like, shoot, I'm so busy averaging into my losses on my value stocks that I don't have any left to actually make some real money. And what happened was, I remember waking up that next day and we're thinking of Harold and thinking to myself, you know what, let's go check the market. You know, when it opens, I'm curious to see what happens with this stock. I go on and I sign on and I look at my brokerage account and I, you know, look at what's going on with my stuff and I think to myself, yeah, let's go see what Harold's stock is up to. So I punch in that ticker and I'm anxious thinking, ah man, how much did I miss out on? And what happened was, it turns out Harold's stock had become a penny stock overnight. And every single dollar he had put into it had essentially become worth a cent or less. So needless to say, Harold was pretty ashamed. I remember briefly after checking that, receiving a message from him saying, oh my gosh, I'm so sorry. I've just lost everything. To him at that point, it was approximately 20 grand. But at the age of 18 to 19 years old, that sticks with you because it's everything you have. And he said, I'm gonna take the year off and I'm literally just going to think about things and kind of reassess what the heck I'm doing. We've certainly since then, and you know, as an advisor, I've seen many clients come to me saying, you know, I lost 30,000 in this or 40,000 in this. We've seen larger numbers, but that was the largest percentage. In terms of the largest numbers I've seen in my constituency, I've seen people take some pretty big risks, but it's never been with money that they weren't able to lose. So obviously we're talking about some pretty wealthy people, but as an advisor, I tend to hear a lot about people's errors. People tend to tell me about their mistakes or when things went wrong or when things went right. They want someone to reflect with who understands what's going on. And when the Bitcoin and the cryptocurrency craze happened, just a few years ago, I knew someone had put hundreds of thousands and maybe even over $1 million into these cryptocurrencies in the late stage of the cycle. And over the course of the next several months, we got the chuckle update of, oh my goodness, I'm actually down $400,000, $500,000. These things happen, but typically when we're dealing with that size, those are people who are aware. They're aware of what they're putting at risk and they're aware of what they can lose. So although, you know, I have these stories of losing 3 grand here or having these small losses as a young investor, I think the biggest investment mistakes I've made, you could argue, were my attempts to get rich quick, honestly. I think there's so much garbage. There's so much trash out there about how there are opportunities, or someone might come to you with an opportunity to, you know, sell this product, and if you recruit enough people, they can recruit other people to sell this product. Things like MLM schemes and get rich quick schemes. When I was young, I fell into all these. I would buy the course, I would take the program, I would do all these sorts of things where I thought there was some trade-off where I could take no risk and put in no effort and get up some sort of money. I was essentially, if I had realized earlier that the quickest way to grow wealth and create a lifestyle you want is to do it slowly, I would have been much better off. I think that I spent a ton of time chasing this opportunity, thinking that those were going to somehow catapult me to success faster than others, when in reality, things really only started building for me once I settled into one idea, accepted the fact that it was gonna take 5 to 10 years, and begun building upon that. So with all of that said, thank you so much for watching. Please, if you enjoyed this video, hit that like button, it helps us so much. Hit subscribe, turn on post notifications for more videos just like this every single week. Until next time.